He yelled at me in front of everyone. When it comes to trading, you've got to have nerves of steel. When you have this high volatility environment, that's when the true trader shown and tested and revealed. Follow your strategy. Don't do anything else except for following your strategy. I only trade twice a day.
Hello everyone from Dubai and welcome to our interview. Today I have the pleasure to sit down with Kathy Lien. Hello Kathy.
It's a pleasure to talk to you.
I'm so excited to do the interview with you. I couldn't wait to meet you in person because I'm following you on social media and I'm super excited about all of what you will say today.
Thank you so much. It's a delight to be sitting here with you in Dubai and to share some of my experience. So hopefully the community enjoys it.
I know that you are a trader with over 25 years of experience. Tell me, how did you get into trading?
Well, actually, I got into trading because I started at JP Morgan Chase. And I started JP Morgan Chase on their cross markets proprietary trading desk. And that's basically where I learned to trade foreign exchange. Mm-hmm. And I learned to trade it on a prop trading basis. So I actually started professionally. And then I fell in love with it and continued onwards. Although I'll have to admit, it wasn't my first career choice. Mm. My first career choice, I thought I was going to be a doctor because coming from, Asian tiger parents. And, I graduated college, went to college when I was very young. I didn't really know what I wanted to do, so I thought I wanted to be a doctor. But then I realized that, I got queasy at the sight of blood, and that was probably a very, very bad sign. And the great thing, I went to New York University, and the great thing about New York University is that they make you take classes in other majors. Okay. So even though I was pre-med, they made me take classes in finance. And I fell in love with it. I mean, I'd never, if you imagine, I went to college at 13. I would consider myself somewhat smart, but I could not figure out organic chemistry. No matter how hard I worked, I was not doing well. And then when I took the economics class and I took the finance class, everything just clicked and it made perfect sense to me. And so I'm very grateful for, being exposed to that. And that's when I got recruited by JP Morgan to go join their trading desk.
Nice one. So 25 years of trading, so to say. So tell me, what were the most important moments that actually shape your career?
Well, I started trading on the foreign exchange desk, believe it or not, the year the euro was launched. So it was a very exciting time because many people don't necessarily remember the legacy currencies. And so there was a lot of energy and excitement behind the euro launch. And that was very memorable to me because just because there was so much activity, and it's one of those monumental moments in finance. But I also remember that, back then, not only was I one of the youngest traders, I was the youngest trader ever at JP Morgan, but I was also one of, two females. And so it wasn't an industry that was dominated by or even had an even share of females. So I remember that it was very stressful at the time because we had to learn how to price the value of the Italian lira and the French franc against the euro, and it was hard work because you had to be on your toes. And I remember at the time that I did it wrong. And one of my senior traders, who was a very nice gentleman, but he obviously was stressed out as well. And so I had priced it wrong, and he yelled at me in front of everyone. And it was the only time ever I got emotional when it came to my job. And that's where I learned, when it comes to trading, you've got to have nerves of steel. And when it comes to the markets, when it comes to your own positions, you have to become as unemotional as possible because the market tests you every single day. And so that was a very important part of my career because I realized that, not only from the perspective of what it was like to be a young female trader in an environment full of men, basically like you imagine, Wall Street. And we were on Wall Street at the time, at 60 Wall Street. But it was also in a high energy and high intensity environment. And even to this day, it's a high energy and a high intensity environment. And I think that traders have to learn, and I learned very early on, how to remove yourself from the emotional part of trading, which is still, hard and it's still work in progress.
It's easy to say, but really hard to manage, right? So how to remove yourself from it?
Well, that's probably the hardest part of trading, which is I would say that, many people have good trading strategies and, they struggle the most. Well, I like to say, they struggle the most with the exit and not necessarily the entry, because I remember at JP Morgan also, I had sat between two very experienced traders. One went long and one went short the euro at the exact same time. At the end of the day, they both made money. Why? Because one only went for 10 pips. The other one held against the 10 pip move against him and then went for 50, 60 pips at the end of the day. So the entry is important. The strategy is important as well. But at the end of the day, the removing yourself emotionally and the discipline comes really from understanding your trading strategy and understanding when it works, when it doesn't work, and trusting it. And I have to admit, it's easier said than done. It took me a very long time to do this as well. But it is probably the most important part, I think, of trading.
Nice one. Tell me, those 25 years, what were the moments that actually surprised you most during the trading? Was there like 9/11 or any other situations that just appeared?
I'd have to admit it was COVID, because COVID was a scenario. 9/11, you're right, it's something that's never happened before. But at the time, it was very early in my career. And, I was in New York, so I was in the center of where it happened. And we were so wrapped up in what was happening at the time. And it wasn't until COVID where, I was trading for a longer period of time. And COVID was also unprecedented, right? No situation ever in our modern history have we completely shut down. And I thought that there was going to be a more lasting impact on the markets. And, I certainly remember 9/11. I certainly remember the other crises in the market, but I thought that this was going to be different. And watching how, the reopening, watching how quickly the markets recovered, watching the strength of the recovery really taught me something to remember in the days that followed. There were times certainly when we had the dot-com bust where I went into the market and I bought, at the lows. And you could easily say that you should have done the same thing during COVID, but it seems like it was so different. But history teaches us from then and in COVID that it is not so different. That, as human beings, we recover, the markets recover. And I think that was surprising to me, but it's also something I'll hold on to going forward, because there will always be crashes. And it's important to remember that as long as the fundamentals remain in place for recovery, for demand and things like that the markets will recover. And that panic selling oftentimes is more of an opportunity to buy than to join in the move.
Nice one. I know that you have written multiple books. Which one is the most you are proud of?
The book I'm most proud of is actually my first book, Day Trading and Swing Trading, the Currency Market. It went on to have 3 editions, and it was translated into many languages, around the world. And I'm the most proud of it because, I meet so many traders all around the world. And sometimes they'll show me the book and they've highlighted everything. They put little bookmarks on it. And I wish, I had time to update a more recent version. But that, I think, helped to shape a lot of traders. Because very early on in my career, I learned how different markets impact each other, which is what we call cross markets analysis. And that's kind of the cornerstone of what I do and what I believe in. And I think many traders, in the industry have kind of learned from that, either from my book or from my lectures. And they also understand the importance of how one market impacts another. And it obviously goes very deep into what moves the forex market, how to trade it. So it's very, very detailed. It's a little bit of an academic book in a sense. It's not written as a conversational book, which my later books were written as, but it's the one that I'm most proud of.
Nice one. Tell me, I can see you on social media all day long. So what are you currently working on?
Well, I'm trading, and it's my first love, which is my first love is trading, as well as just analyzing and talking about the markets, which directly impacts the trading. Because I'm fascinated, even to this day, at
I can see it from your reels, right? That how excited you are about.
And that really goes back to my history, right? Because it just made perfect sense to me when I was in college. macroeconomics, which people struggle with. And I'm really passionate about it because it really turns the headlines into trades. It's things that you see in the paper every day, things you see online every day. It's basically explains how these things impact the trading opportunities. And so, on a given day, I'm trading, I'm analyzing, reading, talking about the markets. I obviously have a lot of other work as well in terms of managing my social media and managing partnerships we have and developing longer term projects and content. So the day never ends. I'm also a mom. So
seriously?
Yeah, I'm a mom of 2 kids. So
oh my gosh. So how do you manage it? Like you have been working like 24/7, right? Or
these days, because I'm, kind of working really hard at our new venture, Prop Trader Edge, it's been a bit more work than usual. But, my kids are a little older, so a little older, not too much older. They're 7 and 11. So they're somewhat self-sufficient. But I think, one of the really unique things is that, I talk to a lot of female traders. And a lot of female traders, especially moms, they really learn how to maximize their time. And I think that this applies not just to female traders, but male traders as well that are successful, which is that they don't trade the whole day. They pick the most optimal time of the day to trade. I'm a huge proponent of knowing when to trade and when not to trade, and trading the best and most ideal time for your trading strategy. And for us moms as well as women, we're kind of forced into it. But professional traders, regardless of the gender that you're in, will soon realize that that they make most of their money in this 1 hour of the day. And I think that's also something very, very important for traders to learn because, and then also when not to trade, right? I mean, we have a big data week with non-farm payrolls, inflation, Fed meeting. There's a reason why the markets are consolidating. It's not because, it's the perfect time to buy low, sell high. It's because it's itching and waiting for something to catalyze the breakout. And so knowing when not to trade and when to trade is, I think, one of the key elements to success. I was forced into it because of, just my obligations. But I think many people start to realize the importance of that.
So tell me about your trading style. So I want to know everything, how you trade, when you trade, what you trade.
So I'm predominantly a forex trader, although I do trade also NASDAQ and gold. And I only trade twice a day, 2 times a day. And it's basically what I call the Asia Open and the early New York Open. So the Asia Open is what I call the golden hour, right around 8 p.m. New York time. That's when, and what's really interesting is that for a very long time, a lot of people avoided trading the Asia session because they say no one's around, there's less liquidity, there's less action. But if you really, really watch the markets, you will learn that usually around 8 p.m. New York time, you'll start to get a kick of momentum when Tokyo comes in. And that creates a really nice momentum breakout opportunity in a calmer market environment that's not diluted by all the news flow that you get in the New York trading session. So it's actually my most lucrative and my favorite time to trade. And it's also, in my opinion, the best time to trade Forex and NASDAQ. And in some ways gold as well. But NASDAQ has really beautiful setups at that time. And then I also trade what I call the early New York session. So a lot of people, they trade the official market open, which is between 9:30 a.m. to about 10:30 a.m. New York time or till 11 a.m. I trade at 6:30 a.m. New York time, which is the early New York Open, when you just have U.S. traders coming into the markets and you don't have the data being released yet. And oftentimes at that time, in my experience, in my 20 years of trading, that there will be a continuation move from what happened in London. And sometimes it's a big continuation move, sometimes it's a small continuation move, depending upon what else is going on in the New York session. But there will almost always be continuation. So those are my two, ideal times to trade. My Asia session trades, often I will carry overnight. They're more leisurely. I mean, sometimes I love saying that I wake up, to profits. That's because I put those trades on. In Asia, I go to sleep and then I wake up to the prices moving in my favor. New York session, you have to approach it differently. You have to be more fast and nimble because there's so much participation, so much upcoming news flow, and then also the market open. And so there's a lot of things going on that don't always lead to as big of a movement unless you have data afterwards, which is then a different trade, a different story. So it's different tactics for different time frames, but those are the two periods that I trade.
And what currency pair do you trade particularly? Do you trade multiple ones, or is it just one trade?
Usually I'll put on, I would say, 2 to 3 trades. And they are the major currencies. My most lucrative currency pairs are actually in Asia, the commodity crosses like Euro Aussie, Euro Kiwi, Euro CAD. Because if you really think about it, in Asia, Euro's not really doing anything. And Aussie and Kiwi are the ones that are moving off of data flow. And they usually have really beautiful continuations. I also love to trade the yen crosses during the Asia. Although recently the yen crosses have become a little bit more volatile. But I love to trade the commodity crosses. And then during the New York session, that's when the really pure majors are, which is Euro dollar, dollar yen, dollar CAD moves really nicely during the New York session. But also, NASDAQ and gold move a lot during those sessions too. So, there's different opportunities.
So what's the perfect setup look like?
So the perfect setup is, for me, the perfect setup is we're in the Asia session. We just had, really good Australian data. So Aussie's already rallying. And we have Euro, Aussie falling because Euro's really not doing anything. Aussie's rallying. It's beginning to fall in the Asia session. I put my trade on for a short trade. It moves in my favor. Usually because we have data, it'll move in my favor. It may close part of my position at profit, and I'll move to break even. I'll hold the rest of it. And Europe comes in. They see the stronger Australian data. They push the move forward, and then I wake up in New York and both targets are hit. And so that actually happens more often than you think. And that's where the combination of fundamentals and technicals come into play. And it may not just be data. Sometimes it's news flow. Sometimes it's some sort of political headline that may have come up during the session. Or it may be, for example, the Fed did something during the New York session, and Asian traders are just waking up and they're responding to it. So it's fusing the news flow in the that's coming out fundamentally with what the momentum in the charts are showing us. I always say the best trades are the ones where you have fundamentals, technicals, and market sentiment on your side. And that's what I look for in almost all my trades. Fundamentals is obviously the story or the data. Technicals is the overall longer term trend or the shorter term trend. Sentiment is what people are feeling right this moment. Because the worst experience is where you put on your trade and it does nothing or it goes against you for hours or days, right? And so you want the trade to either hold steady or start moving in your favor immediately, because then you don't have doubt, then you have positive reinforcement. And the way to do that is to make sure that sentiment is on your side. And what that means practically is to sell into weakness and buy into strength. You don't want to try to arbitrarily, if the market's rallying, suddenly decide that this is the time to sell. You want it to wait for the market to turn first, and then you join the move. Another way to describe that is where we are on a multiple time frame analysis, right? Where, if on a short-term basis and a long-term basis, you're beginning to see the market fall, that's when you want to join the sell-off. You don't want to do it when when you're basically fighting the trends. So there's different ways to describe sentiment, but it's probably the most important piece of the puzzle.
Oh, nice one. So tell me, is there one certain rule that you never break in trading? Because you seem to be like the perfect trader I've ever met. So what's the reason, or what's the rule that you never break in trading?
I mean, I break my own rules. There's rules that I should not break. Sometimes I'm tempted to break. For example, I tell myself that, Kathy, you only trade 6:30 to 8 a.m. New York time. This is when your setup is good. But sometimes, the 8:30 data comes out and it's really tempting to trade. And I will trade, especially when I trade it live with, on YouTube. But it doesn't reinforce my trading strategy. My trading strategy is very specific, which is looking for trades in the early New York Open or looking for trades in the Asia Open. And when I take those post like 8:35 a.m. trades after the big jobs report, it's I don't want to say it's just for fun, because it's really not for fun, or it's not illustrative either, but it doesn't reinforce my trading strategy and setup. So it's not really supposed to be the trade that I take. Now, in terms of my cardinal rule of my number one rule of trading, I guess, like, what do I not do? Let me think about it. I mean, I guess, my primary rule is I don't trade ahead of data, of big data. And I try to tell people this all the time. And it's what we said earlier. It's very important to know when to trade and when not to trade. So when we have certain events like the Fed meeting, or the non-farm payrolls report, or the U.S. inflation report, or an election, I won't trade ahead of that. I will only trade after that, either immediately after or in the Asia session, the next session after. That is probably the most important rule in my trading, and what really saves me from bad decisions.
Have you ever felt like revenge trading?
I've been trading for a very long time, and there were periods where I have certainly revenge traded in the beginning. But the way I approach things is that I always look at each trading session as a new one. And usually if I have a session where, my trades don't work out, they don't work out. And then I will just square up and I'll start the trading session fresh. And this is hard for many people. The only reason why I think I'm able to do it is experience, faith, and trust in my strategy. Because I've been doing it and trading it for so long, I know that there will be times it doesn't work. There'll be a session, there'll be a day, there'll be a week it doesn't work. I mean, I think we've had, over, I don't remember the number, I want to say like 30 months of no losing trades. 30 months of no losing months. But within there are losing sessions, there are losing days, there are losing weeks, right? Not every single one is going to be a winner. And whenever we do have, great weeks, that is the perfect time for me to remind everyone, we'll have losing days, we'll have losing sessions, we'll have losing weeks. But because there's so much data behind the trading and because I'm trading twice a day, it's a lot of data sets. I have the trust, the faith, the conviction of my trading strategy, that I know that if I lose in this session, my strategy is going to come back because I've traded it for so long. And that is something that just comes with experience and time and real market conditions. It's hard to teach.
You really have to spend the time on it, right?
And it boils down to understanding your own trading strategy inside and out, and then trusting the results that have been formed over a long period of time.
What do you usually do when you have like losing streak? Let's say that you have 1, 2, or 3 trades that ended in loss. Do you punish yourself somehow, or do you like stop trading for some time, or how do you solve it?
I close out my positions, and then I just, there's no punishment. I stop trading for the day, and then I start the next session because like I said, it's all about understanding the long-term performance of your strategy. I know that on this given day, it may not work, but in a given week, there's much more days than it will work than it will not. So maybe this gives me the opportunity to explain why my strategy works so well. The reason why my strategy works so well is because it's timed perfectly. We talked about how I believe that the perfect setup is based upon fundamentals, technicals, and market sentiment. So fundamentals is the data, either just came out or the session before or the bigger story, which really another way to describe it is the longer term trends, right? That's created by the fundamentals. Either, gold is up in a long-term uptrend or it's not. The technicals is, whether we're getting the setup right now. And then the sentiment is, how it's supported by multiple time frame analysis. And then the last piece of the puzzle is timing. Timing, and the reason why I trade the Asia Open and the New York Open. This also works for the London Open, but I'm in New York. I have to sleep sometime, right? is that's when you have the rush of participants come in. So when you have the rush of participants come in, you get the momentum in the markets. So ultimately, the best way to explain my strategy is that I'm a momentum trader. I'm a momentum trend trader, timed at the perfect time of day where the markets are opening and you're getting a momentum push. And that's why it works most of the time. And that's why the results are good, because most of the time, the traders, will come to their desk, they'll see what happened overnight, they'll put on their new positions in reaction to that, and then they'll push it in that direction. Sometimes by a large amount, sometimes by a small amount. But more often than not, there's continuation at the beginning of the trading session, and that's why it works. It's not some sort of fancy mathematical, hedge fund strategy that PhDs create for me. It's really about understanding the dynamics of the market, and anyone can do that.
I love the way you talk about trading. It's so exciting, and I know there are multiple traders who are just at the beginning of their trading career, and I believe let's talk about the roadmap for traders who are just starting out, and show them how to start trading really from scratch. Because I believe that, most of the traders, when they jump into trading, they get a bit confused. They don't really know where to start. It's like first it looks very easy, but then when you sit in front of your computer, then you are confused because there is too much information. And then what I would love to do, it's like to talk about some kind of roadmap for the first 6 to 12 months, how the trader should prepare himself for the successful trading career. So from the beginning, like from fundamentals, technicals, psychology, what to trade actually, what not to trade, when to trade. So tell me what the first 3 months, what a trader should expect from trading.
Well, first of all, before you even become a trader and decide that this is what type of trader and strategy you want to do, you need to have some self-reflection. Because, oftentimes people will say that I want to day trade, but then they don't have because, they maybe work a job, or they may be standing as a cashier in a grocery store, that you cannot check your quotes constantly, or maybe a doctor and you're seeing patients. You may not be able to do that. On the flip side, you may say, I want to be a swing trader, and then every 1 point move against you, you start panicking. So you need to think about what type of person you are, what type of personality you have, and to make sure that you fit your trading to your personality. Because if you try to go for large points, but you see that you don't have the tolerance for the pullback against you, then, even if you try to go for those large points, you're going to sabotage yourself. So the first step that you have to do is to think about what type of trader what type of person you are, and what type of trader you need to be. Not what you want to be, but you really are. And a good, maybe a litmus test for this is, and I always give this example. It's like, let's say you are going to the grocery store, and your spouse has said you have to buy this toilet paper. We've ran out of toilet paper. So you go to the grocery store and you see a line of 20 people in front of you. Do you wait patiently online till it's your turn to buy the toilet paper? Or do you get in your car, drive around the block to another grocery store that, maybe has 5 people in front of you? And, I think, first of all, if your choice is, I'm going to stay in this line for 20 people, that means that you have the patience to hold your trade. If you take the time to drive around the corner to that other grocery store where there's still 5 other people, that means you're very impulsive. And because probably takes the same amount of time, if not longer, right? But you need immediate satisfaction, and you need immediate gratification. And that means that you're much more suited for day trading. So you need to figure out what type of trader personality you have. So that's step number 1. Step number 2 is there's so many instruments to trade. And you're going to hear from a lot of educators, a lot of people on social media, trade this, trade that, I trade this, I trade that. Really, at the end of the day, what you need to do is pick one instrument and master it well. So much so that, instinctually, you will know what each point move is for or against you, what typical range is during this time of day, when it moves, when it doesn't. You want to become the master of that one instrument, because it's so easy to get pulled in all these different directions, looking at all these different instruments, and that is only going to create confusion. I work with a lot of successful traders. I've interviewed a lot of successful traders for my book, and the one commonality that they have is that they just trade one instrument. And that's it. And they really try to just master that one instrument. So the first step is figure out what type of trader you are. Second step is to pick one instrument to trade. Honestly, it doesn't matter, right? It's either gold, NASDAQ, or forex, or DAX, or whatever it is. Just pick one and understand it well, and try to really demo trade that or practice trade that as much as possible. So after you picked your instrument, the next thing to do is to pick your time frame. What kind of time frame chart do you want to trade on? Because the strategy that you use and the indicators that you use and the entry setup that you use on a 15-minute chart is not going to work the same on a 4-hour chart or a daily chart. So you need to figure out what time frame works for you. And that should be based upon the time you have to trade, as well as your risk tolerance. And then you need to figure out, am I going to trade on technicals, fundamentals, or both? Then you need to decide, am I going to carry my trades overnight? Is this the type of trade that I'm going to allow to carry overnight and expose my risk? Or do I want to only have my trade open in this 1 hour period? And if so, therefore I have to trade a shorter time frame. And then, so after figuring out, the general strategy, then you have to think about your exit and risk tolerance. And this is extraordinarily important, Lenka. Basically, the most successful traders that I have met are not the ones that swing for the fences. We're talking about consistency here. Most of them go for base hits, which is, replicable trades with high accuracy, because there's basically two ways to succeed in the market. It's either high probability, where you lose 4 times and make big 1 time, or it's there's 2 ways to win in the markets. Either high accuracy, where let me just rephrase that, because there's 2 ways to win in the market. Either high profit, which is that you lose 4 times and you win 1 time, and then you make big to cover up the losses. The other way is what we call high accuracy or high probability, where you win maybe 4 times, it's small, and your fifth time, which you lose, is also small. So maybe the winners and losers are the same amount, but because you have a high percentage where you're winning maybe 80% of the time, they're not as substantial as the big win, they're consistent. So you need to decide what type of trader you are. And of all the successful traders that I've met, it's always been high accuracy, where they have 1-to-1, maybe slightly, sometimes it's hard for them to admit, slightly negative risk reward, where they're focused on the consistent wins versus the big win. And this is so important because, if you think about it, as a trader, a lot of it is emotional. And imagine yourself sitting there with your trades, and you have loser, 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 loser. And then you were sick that one day for the winner. Then you were back to loser, loser, loser. Sometimes it's really hard to take that next trade when you have a series of losers, even though you're supposed to, because you're supposed to wait for that winner. Would you rather have winner, 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 and a small loser, and winner, 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 and all of them be small but add up to a big, to a consistent weekly or monthly target? I think most people will say that is much more palatable psychologically. And that positive reinforcement is also really good for trading, because you want that consistent positive reinforcement, because that keeps you going for the next day. That's why I'm a huge believer of high probability trading. It's not the 3 or 4 R's that everyone's talking about. It's maybe the 1 R, but it's 80% accuracy. And that's how I trade. And that's how most of the successful traders that I know trade, which is based upon the base hits and the consistency in the base hits versus the big extenuous winner that you may have. So realizing the importance of that and managing your exit strategy accordingly is also very important. And that comes with maybe trailing your stops, and so in the beginning I talked about how, my ideal trade was one where I would have my first target hit and then my second target hit later. And the way that works is that when my first target is hit, I move my stop to break even. So I have already taken some money off of the table. I have already banked some profits. I have already added to my P&L. If the second part of the position continues to move in my favor, then I'll trail my stop, hopefully capturing more of the move. If it doesn't, no big deal, because I already made money in part of the position and I'm out at break even. So that's not really a loss, it's still a win. So you can still manage it both ways. Or you can just go, one trade after one trade, one after one trade. But having this type of tactic and having the positive reinforcement gives you the confidence to keep trading. And confidence really, at the end of the day, is one of the most important elements of trading.
Mm-hmm. So from your own experience, how long does it take to become really skilled trader? Because I think usually traders, when they jump into trading, they feel like after watching 2 YouTube tutorials, they are already skilled enough to become profitable in the long run, right? But how much time do you actually need to spend on with your screens?
That's a very good question. I've been trading for a very long time. I've met a lot of seasoned traders who've been doing it for as long as I've had. I've also met a lot of new traders as well, particularly with the explosion in prop trading. It hasn't been an industry that's been around for a very long time. And I have seen these traders find success usually between 6 to 12 months. 3 months sometimes, but to be honest, this is always interesting to me, right? And I think that the recent moves in the markets is the true test of whether these traders can survive. Because for the most part, most traders who have only started trading in the past year and change have only been in bull market. Only bull market for stocks, only bull market for gold. And it wasn't until this recent shakeout that it's a reality check. How many of these how many people did not get blown out? How many people were able to make money on the downside as well as the upside? Because it was so easy to keep buying on dips. But when you have this high volatility environment, that's when the true trader is shown and tested and revealed. And a lot of people got shaken out. But a lot of people did well as well. So I think that it takes time in the markets to really prove whether you're a consistent trader, and it takes different market environments. And for better or worse, right now we're getting different market environments. And it's certainly been troubling and difficult for some traders, but this is where you really learn to hone your tactics, I think.
I would love to go back to technical analysis, because I feel sometimes traders just try to overcomplicate it, and the more things you have on your trading view, the better. So how to keep the technical analysis right from the beginning, not to overcomplicate it?
You're absolutely right. Paralysis by analysis is what I describe it. When you have too many things on your charts, you certainly can convince yourself of everything or nothing at all. And it's very, very confusing. To be honest, as from my experience, as well as from working with a lot of traders, you want to keep it simple. You can make money trading moving averages. You could make money trading opening range breakout. You can make money trading volume. Pick one strategy, just like one instrument, and learn it well. And same thing with time frame. So you want to keep it simple. And I like to declutter my charts as much as possible. And I do that by creating my own indicators and things like that. But at the end of the day, just pick one type of indicator, one type of setup, and just learn it well. You don't need to put parabolic SAR and Bollinger Bands and moving averages and this and that all in your charts, because it will stress you out and provide the lack of clarity.
You mentioned that you create your own indicators. What's the best indicator that work for you?
Well, I create my own indicators. So my own indicator is called the ZIP indicator, which is the momentum indicator that I use to trade Asia in the New York session. I also have these multiple time frame trends heat maps I created. So what's really beautiful about that is that I can be on any time frame chart, like let's say a 15-minute chart or 1 hour chart, and I have a little box that shows me what the trend is on the daily chart, on the 4-hour chart, on the 1 hour chart, the 5-minute chart. So it changes as the price changes. It shows me that even if I'm looking at the 1 hour chart, if there's some sort of stabilization on the 5-minute chart, it's like, Kathy, pay attention. Maybe the move is stopping because the short-term indicators are shifting direction. So these are just tools for me to make, so I don't have to be flipping between all of these charts, and to make it simple for my own analysis.
What's the difference between trading your own capital and prop firms? Because I know that you have recently started talking about prop firms as well. So from the psychological point of view, what's the difference between trading your own capital and funded accounts?
I mean, there's a huge difference, which is that in your own account, there's no rules, right? In a prop account, there's quite a bit of rules. And so, for better or worse, because in some ways, these prop firms, they create rules that a good trader should be following, period, which is don't have your drawdown exceed a certain amount, try to aim for a certain profit target, try to maintain a certain level of consistency. And so a lot of traders struggle with that. And then, when you trade your own money, you need to have the discipline yourself. So if you're a new trader trying to learn how to be a trader, having some sort of parameters around you can be helpful. But at the same time, it's can be less forgiving because when you have your own money, then whatever, you're never going to be breached out of anything, but you could potentially lose all your money, right? So you have to impose your own discipline. So it really depends upon what type of trader you are. What I have seen is that a lot of people, they start out in prop because of lack of capital, because of lack of experience, because the risk is lower. It's just the challenge fee and not the potentially $10, $15, $20, $50,000 of capital that you can control. So the risk is much lower and it's much easier and more palatable. And then later on, as they develop capital, they may have a separate account that they open up with a broker directly, that they trade their own way. They may want to take those swing trades and have the bigger wins. So, but most people, if they're new to trading, I see will start more with the prop route because of the lower barrier to entry.
I know that you have recently launched your new project, right? So can you tell us a little bit more?
So my new project is called Prop Trader Edge. And the goal of Prop Trader Edge is basically to provide education, transparency, and motivation for traders. I started a website called Daily FX. I don't even remember, like maybe 15 years ago. And the success of Daily FX was really based upon providing traders with education on, not only what moves the markets, but also what is happening right now, like market analysis and commentary. A lot of traders who are starting out trading now only learned about trading through the charts. And they don't understand the importance of watching other markets, importance of how the Fed meeting may impact the instrument you're trading, importance of how, for example, the dollar may affect gold. And so we want to provide traders with that type of education. We also want to provide them with motivation, sharing stories about people who've done well. I believe, even though we're doing this, wonderful podcast, that no one really wants to watch an hour-long podcast. I think they want a summary.
With you, definitely.
Of course you want to watch this whole podcast, right? But they want a summary and they want the key highlights, and then they want to go back and watch the parts that they're interested in. So we also provide kind of the summaries of some success stories, and then we provide transparency in the sense that things that are happening in the prop firm space, what prop firm's doing what, and things that are frustrating and exciting traders, we want to share those stories as well. So it's more of sometimes people will say it's another prop comparison website, but it really isn't at all. Prop Trader Edge is purely dedicated to education and transparency for the industry, and that's what we hope to deliver. We also have events that we created. We just had our first Prop Trader Fest, where we had over 20 speakers, very successful and popular traders from all walks of life.
I was watching it, so it was great.
I hope you enjoyed it.
Yeah.
And it was very well received, and we want to do more of that and bringing together different traders and being able to share it with the community. And it's all with the goal of helping people understand that there's not just one way to trade. There's so many different ways to trade, so many different types of trading strategies. But at the end of the day, if you notice from the traders that we invited, they only do one type and usually only one instrument. And so it's about learning how to do one thing well, rather than trying to be the jack of all trades, and showing people that it's just not just one way to succeed.
Nice one. I love it. Yourself, do you trade with prop firms?
Yes, I trade with prop firms. I have my own account, and it's a little bit of both.
I would love to also touch on gold as well, because you cover like everything about trading gold as well, right? And you mentioned that you partially trade gold as well. We have recently seen the all-time high, and I know that gold made a lot of traders rich, but as well as nervous. So what do you think about gold price this year? So are we gonna see any new all-time high?
So gold has had a fantastic run, and it's important to understand what drove gold higher in order to kind of make assumptions about whether it's going to continue to rally. Because I can give you my view, which I'm on CNBC a lot. I share my views, but at the end of the day, it's much more important for you to understand how to analyze it yourself. So, there are a few things that were driving gold up. Number one, it was the weakness of the U.S. dollar. And it was, the tariffs that were coming from the U.S. and how investors were punishing U.S. assets for the policies that were happening. And so if you think that the tariffs are going to continue and they're not going to be repealed and there could be more tariffs, then yes, absolutely, gold could continue to rally. If you think suddenly President Trump is going to decide, I'm happy with everything, no more tariffs, then the flip side is then gold is going to crash. I'll let you make your own political decision on that. The second one is reserve diversification or diversification period, not just by central banks from around the world, but also by institutional investors. In this type of climate, do you think that if you were the head of a central bank, are you going to put all your eggs in one basket, which is the U.S. dollar? Or are you going to want to diversify into euro assets, into gold, into other instruments? I'll let you make that decision yourself as well. But I think, we all have our own opinions. It's probably a good time to continue diversifying, right? If I was either institutional investor or a central bank, and then third, where is U.S. interest rates going? Because one of the most important drivers of gold prices is interest rates as well as the U.S. dollar. The Federal Reserve is very much expected to be one of the few central banks cutting interest rates in 2026. Do you think that's going to change? Do you think President Trump is going to tolerate a rate hike? Do you think he's going to push for more rate cuts? I'm sure we all know what the answer is to that. And unless that changes, then, yes, I do agree that the rally in gold is going to continue. And the last piece is, of course, geopolitical risk. Are we going to suddenly have peace around the world, or are we going to have more fires? We all have our own answers to that. If you think all of it is going to remain unchanged and exacerbate in terms of tensions, which I do believe, because we're just in the beginning of the Trump presidency, then in that case, gold has fundamental reasons to continue to rally and for buyers to continue to swoop in. Now, I have often said I've stopped predicting Trump. And so, therefore, at any point in time, that could change. At any point in time, we perhaps will have peace in the Middle East. Perhaps, the tariffs will be rolled back suddenly. I don't know what. But as things stand right now, there's absolutely no reason to think that the gold rally is over. But the political landscape could change at any point in time. And if they do, that trend will be a trend that probably lasts for some time. But it doesn't look like the winds are moving in that direction.
And what about you and gold? Did gold make you rich last year?
No, the thing is that I don't trade gold as actively as I do the NASDAQ and forex. So I'm not. So gold is, it's not something I've traded often. It's more the NASDAQ and forex that I trade. But in terms of gold itself, one of the other things I want to mention is that we have this huge shakeout in gold, right? Double-digit moves in silver and really big moves in gold. One of the things that I think is interesting for traders to be aware of is that the reason why we had such big moves is because people were over leveraged and it became a speculative instrument. And a lot of those traders were shaken out with the collapse in gold and the big swings. And so I think that moving forward, first of all, a lot of people were burned. And so they're going to be much more cautious. A lot of people taking profits and they're going to be much more cautious because they've already seen how violent it can be. And therefore, I don't actually think, barring any sort of shocking geopolitical risk, I don't think we're going to see those huge moves again. The gold the gold volatility index, which is the one that measures, gold ETF volatility, went from its high levels of, above 45 in January, February, back down to about 30 something right now, which shows that the characteristic of gold is changing, and that option traders think in the next month volatility is going to come down in gold, and I think that will make it much easier for people to trade. And I also think that if volatility comes down in gold, people will be less apprehensive about getting back into it. When they start to see that we're not seeing those big moves again, that gold is only moving, 1% a day or 2%, that they're going to be more apt to come into it than when we had those really big moves. So while a lot of people were shaken out and there's a lot of fear created by the move, I think after fear comes stability.
Nice one. Katie, I don't want to keep you too busy, so last two questions. What's the number one rule that every single trader should look at every single time he is in front of his screen?
The number one rule that traders should look at.
Whenever you start trading, just look at it, read it, and remind it.
Okay, that's an easy one, which is just follow your strategy. And if it requires putting a Post-it on your computer and making sure you see it every single day, follow your strategy. Don't do anything else except for following your strategy and following your setup, because that's probably the most important thing. When you get distracted, that's when it leads to impulsive trading, revenge trading, everything else that's can crush your accounts. You want to stick with your strategy, you want to follow it and follow your rules. I mean, at the end, I guess the best ability to say is follow your trading rules.
And last question, you are very active on social media, so I'm sure that you have been watching like thousands and thousands of different advices on social media. What do you think is the worst advice you keep watching on social media?
The worst advice.
Yeah, that doesn't actually work, but everyone keeps saying it.
The thing is that everyone finds success in a different way. And, I think with a lot of I really don't know what the answer to that is. I think that, the people I watch, to be honest, are the more disciplined one. I think there's a lot of things to be careful about in terms of who you choose to follow and who you choose to watch, because there's a lot of people who just started trading and have touted incredible success in a very short period of time. And usually that's due to leaning too heavily in one trade one way. And there's probably no evidence that they can do this consistently over a long period of time. And so I think there's just a lot of red flags when it comes to following traders on social media, which is you want to make sure that they have been successful for a longer period of time than 3 months, for example. And that it's not just, whenever I hear people say, all I've done is buy gold on dips, that really makes me wonder whether they're going to be able to survive in different types of market environments. So you want to make sure that when you follow someone on social media that don't just follow them. You watch how they trade for real and you see if it's a strategy that makes sense to you.
Nice one. Katie, thank you very much for joining me today. It was really a pleasure talking to you, and wish you all the best in trading and in your personal life as well.
Thank you so much. I really enjoyed this.